All right. So real quick, sorry about the day two recording. I thought I put it into the Dropbox. I think I put it into the wrong folder. So after this call, I will fix that. So you'll have day one, day two, day three inside of that Dropbox. All you do is click the link and then you'll see all of the videos. So sorry about that. I thought I did it last night after that 11 p.m. session, but I did not. But today's lesson is going to be the sniper. This is where we start looking at the actual institutional setup, right? So first, day one, we looked at the market structure. Day two, we looked at the liquidity. Day three is the sniper. This is the institutional setup that is actually grabbing the liquidity. So this is where, we're just waiting. We see equal lows or equal highs, and then we're just waiting for them to get taken out and create this sniper setup. So let's go ahead and start adding everything we've been looking at. Okay, so let's say we have our downtrend like this. My daughter is still awake too, so I apologize if y'all hear her. Okay, so we have our downtrend, right? Bearish trend. So we're looking for sells, right? We're looking for price to continue down. But we notice that in this downtrend, we start seeing these equal highs, right? So we have these equal highs here, and they can be perfectly equal. They could be relatively equal. So even, something like this is going to be considered equal highs, okay? What we want to do is, first, we're going to note, okay, our market structure is bearish. Second, again, here's our liquidity. So now we're basically just playing a waiting game. We're just waiting for price to create our institutional setup, which is going to be the sniper in this case. So what we're going to look for, let me look at that, is going to be price trade up through the high, like this. Should be a bullish candle. So green. Kinsley, get down. Get down. And then bearish engulfing. Okay, so bullish move up through the highs against the trend, grabbing that liquidity, bearish engulfing. This is going to be our sniper setup. What we are saying is, with this concept, is right here above these equal highs, the retail traders are stuck in their buy positions, whether they were buying the breakout or buy stops, right? We talked about liquidity, those buy stops above the equal highs. That's what we're talking about. So anyone shorting this resistance, right? Because this is resistance, this is a double top, it's a downtrend. A lot of retail traders will be looking for, real quick, okay? A lot of retail traders will be looking for, this here. They're selling here at this resistance with their stop loss above the high, and then they have their buy stops there for the breakout in case it does go. But we know that if we see, I need to go forward. Okay, so I'll redraw it. Bullish move up to the highs, again, grabbing that liquidity, bearish engulfing. This is our sniper setup. Once this closes bearish engulfing, you don't want to get in early, right? Sometimes I see people, they see that, that it's, right here, and then it's right here, and they're already ready, like waiting for the sell. You can't do that because this could easily close right here or even shoot up, and it's not a valid, trade. So we have to wait for that candle to close bearish engulfing. And then what we are going to do is enter a sell on the retest here. So the first entry will be at the open. We're selling here, and our stop loss will go above the high. Because if they break the high, that's going to release the liquidity, right? So if they break the high, it's just going to keep going up, okay? The second entry, we can enter at the 50% of the bullish candle that grabbed liquidity. So keep in mind, we're not doing the bearish candle here. We are measuring the candle that grabbed liquidity. This happens to be the bullish candle that grabbed liquidity. We're going to go ahead and mark the 50%. And then we're going to go ahead and just delete that. We don't need the fib tool anymore. So there's a question last night on the webinar. Why do you enter at the 50%? And the answer is because at 50% and lower is where the price can go without releasing liquidity, right? They go to 50% here, you see how it's still at the equal highs. Anything above the equal highs, so anything above here is gonna release that trapped liquidity, right? So that's why we can enter 50%. That's like the max area. Like, okay, 50%, if they go any higher than that, they're gonna start releasing liquidity. And then, you know, if it goes even higher than that to the high, that means they released all liquidity and that setup is not valid anymore and your stop loss will be hit. But these are the two valid entries right here. Again, that's going to be the open of the candle, right? Here's your open, or the 50%. Either way, those are your valid entries, and your entry will be, again, at 50% and stop loss above the high. So you can see how, you know, you're getting a little bit better risk to reward ratio when you enter at the 50%, and then you're going to target equal lows or a major low. So for this example here, if we were just targeting the low, you see how we're risking 15 pips to make about 85 pips, right? About a 1-to-6 risk to reward ratio. That's what's beautiful about these. We could lose trade after trade after trade after trade, which we're going to get into risk management and risk to reward ratios later in the lesson, but we could lose, you know, 4 trades, win 1, and we will be in profit. So you don't have to, you know, win 80% of your trades or 90% of your trades or 100% of your trades to be profitable. If you're trading just a 1-to-3 risk to reward ratio, you only have to win 33%. So you could literally have more losses than wins, but if you're trading proper risk to reward ratios, you will be a profitable trader. Those of you that are in my signals group, you know, sometimes I call signals that might all lose. So eventually the ones that hit will be put us in the green. Okay, so this is one of these variations. And what I recommend you doing is what I do, I box in the candle that got engulfed. So we're gonna box in the bullish candle here that grabbed liquidity, and we're gonna box it in where the bearish engulfing took over. I like to do purple. You can do whatever color you want. Okay, Patrick, what did you miss? Just this first little lesson. I'm gonna go over another example. We're just going over the snipers, so you can watch the recording. All right, let's look at another example. And this is probably gonna be the most common one that you see. Just say we have a perfect double bottom here. Okay, so at this double bottom, we know this is retail support. Retail traders are going to be looking for buys. You know, every single retail textbook, most of all the courses people take, they are all teaching you this double bottom at support or buys. What we are going to look for is, we know there's going to be stop losses below the lows. Anyone buying here, stop loss below the low. Every course teaches you that. And then we're going to have these sell stops. It'll be new sell stops. So people that will, you know, get into new orders once this low is broken. And also protective sell stops for some traders that, okay, the low breaks, my buy is not in profit, you know, take that loss and then take the sell down. So what we want to see is price trade down through these lows. So we have a bearish candle through the lows, like this. So when we see the bearish candle take out these lows, we know that's going to trigger the sell stops. That's grabbing that sell side liquidity. If retail traders are selling, right? Just all those sell stops are getting hit. It's looking super bearish. Maybe it's a downtrend. And then we have this big bullish engulfing candle here. Once this candle closes bullish engulfing, we know that this is our sniper. So when we retest here at the open, that's a valid entry. Stop loss below the low, or again, 50%. There's your 50%. And we can enter there as well. Okay. This is another sniper setup. All we are really doing, this is super simple. We literally just look at price action. We look for retail chart patterns. This is, for example, the double bottom at support. We identify the equal lows, and then we literally just sit and wait. Price is playing out, playing out, playing out. Okay, now it made equal lows. Let's identify the equal lows. Maybe London, open, we see a down move to the lows. We wait, because just because there's a down move to the lows doesn't mean it's a valid setup. We still need that bullish engulfing right after. Yeah, so this is creating a new trend here, because this would set the low, higher high, higher low. So this is a reversal pattern. Some of them will be reversals, some of them will be trend continuations. It's just how you're gonna have to take it. But that's why you're trying, once you see these taken out though, because people say like, don't trade against the trend because you're picking the high and low. Once we see these lows taken out, we know they grab liquidity. If there's a bullish engulfing after this, this is still gonna be a valid setup. Will you lose some of them? Yeah, you're gonna lose some of them. But again, our risk to reward ratio, we're only risking 13 pips. These highs here, 75 pips. We only have to win almost 1 out of every 6 trades. So you might win 3 in a row and be way ahead, and then you might lose 6 in a row, and then you're kind of back even. That's just how it's going to be. This is not my favorite chart pattern. I prefer the trend continuation ones, like I showed you the first one, but I'm just showing you all the examples, okay? And this might even not be, if it's like super bearish, okay, maybe don't take it, but sometimes this might be something like this. Let me get this price. This could be like, something weird like this, right? So it's bullish here, bearish here, but we see liquidity grab here. It's just going to depend. So a sniper, I mainly reversal. So there's going to be reversals and continuation. There, you'll see both. Engulfing candle setup, covering the body or covering the wick too. The body. So down move to the lows, bullish engulfing. The candle body has to close above this candle here. So, you could even see maybe a huge wick. Oops. Could be a really big wick and comes down and still closes bullish engulfing, still valid. Does it have to be engulfing candle? Sometimes I see a couple of bearish or bullish candle. So for the sniper itself, it has to be traded to the lows, bullish engulfing immediately. Or it can be bullish move to the highs, immediately bearish engulfing. Okay, so let's go look. We went over this setup last night. Okay, so again, here's a downtrend, consolidation, and then some people might consider this a bullish trend here, like short term there, because it's bullish makes a higher high. So that's where it's going to get a little bit difficult for new people. So technically, Like price made a higher high because it broke these highs, higher low here. So it's just going to be multiple confirmations. But for this example here, we have equal highs here. Right? Equal highs. Bullish move up through the highs, bearish engulfing. Once we saw this close bearish engulfing here, we would just be waiting. So we would be waiting, we're waiting, we're waiting, we're waiting. Price is getting close, and then we sell. There's your entry. Would have been a short position like this. Stop loss above the high, so you're risking 15 pips, and I would target these equal lows. So even right there, you're risking 15 pips to make 95. 1 to 6. So you only have to win 1 out of every 6. But then look at this. Price just free falling from here. You'd be up 200 pips on this trade with literally no drawdown, maybe a pip or 2. So it has to be engulfing no matter what. Yes, for the sniper. The kill shot is a different setup, which does not have to be engulfing, which is actually this one up here. Equal highs, down move, bullish move up, price trades under in 3 candles. So this is a good sell and retest, but it never retested. Okay, let's go look at some other ones maybe. So I did see this earlier today. See these equal lows here? Look at this big wick through the lows. This is all grabbing liquidity here. And my EA actually called this buy here as well. I think it was on the 30-minute though. Yeah, it called it right here. So look at this. Here's your lows. So is this a downtrend? Yes, right? Oh, here we missed this setup. Equal highs, bullish move to the highs, bearish engulfing. Perfect wick on the retest. That's a sniper. Here's another sniper. Here's a low, here's a low, here's lows in here. Down move through the lows. So this is the bearish move through the lows right here, right? And then you can see bullish engulfing, right? The candle closes. No, eat it, Kinsley. Closed bullish engulfing. The next hour candle comes down, retests. So this trade, we could enter at 50%, which clearly didn't hit. We can enter at the open, which did hit. You would have had 13 pip drawdown, stop loss a little bit high there, but we'd be targeting up here. So this trade is already in profit. Y'all see that? Down move to the lows, bullish engulfing. See how it's a reversal here? How it's trading up now? This is still a downtrend, right? So here's obviously downtrend. Here's a continuation sniper. Bullish move up to the highs, bearish engulfing. We are in a downtrend, so it continued. Trend continuation. And then this is a reversal sniper. So you will see both. All right. On the continuation sniper, since it was so small, I would have just entered at the open there. And this one might, see how it barely wicked it? So I would have entered at the open because if we enter at 50%, right, quit jumping. If we would have entered at 50%, we would have missed it. And look, that's only about 5 pip difference. So, you know, there's no need to just be that, you know, that picky of 5 pip drawdown. All right, so we're still on USD CAD. So Harry says, could I explain it one more time? So equal highs. See this? 1, 2, 3 highs there. Here's some highs as well. Bullish move up to the highs. Above these highs here, liquidity is grabbed. Okay, they grab liquidity here. Bullish move up to the highs, grab those buy stops above the highs, bearish engulfing. Look at this. If we really zoom in here, let me just delete all this. Look at this. See this trend line? Look at this bullish breakout. All the retail traders are buying above this. They have buy stops above the highs, catching this breakout trade. They are expecting a bullish move to go up. Retail traders are buying, buying, buying. Institutions are selling, selling, selling. Once we see the engulfing candle, we identify it. So bullish move up to the highs, bearish engulfing. That is our sniper. We are going to drop our line here, and then we just wait. We would have waited, and eventually, here's your setup 2 days later. Oh, this was June 5th. All right, so 4 days later. Look at that entry. You could have put a sell limit there. I like to actually wait. I like to do market execution, but you would have been risking 17 pips, right? Stop loss above the high. And then you're targeting the lows. Where are the lows? Down in here. There's your lows. The reason we're targeting those lows is because, again, once those lows are taken out, you're probably going to see a new setup. There's no reason to hold a sell when there's going to be a new buy setup. Yeah, this is valid after 14 days. It's only 130 pips. That's not much. I would say once it's like 500 or like, let's say 350, 400 pips, then start going, okay, screw that. And then if it's, after like 2 weeks, maybe even a week, I wouldn't really look for it. But this is very clean here. Clear fake breakout of this trend line. So this is basically like swing trading. So swing trading is, I don't even like that word, because swing trading is going to be, whatever you want to call it. You could say, I'm going to swing this trade for a day. I'm going to swing this trade for a week. I'm going to swing trade this for a month, a year. So I don't consider that. If you want to call this swing trading, we will see. So this trade would have been an entry here. Take profit would have got hit in 1 day, 9 hours for 130 pips. So if holding a trade for a day is a swing trade to you, then I guess that's the swing trade. To me, that's more of a day trade. 130 pips is not that much, but just showing you that's your entry. Does that setup make sense here? They don't want to break above this high because that's where the liquidity was grabbed. The setup on the 10th is at a kill shot. This one here, this one is actually still a sniper because it is a bearish move through the lows. Kinsley, bearish move through the lows, bullish engulfing. If this was a kill shot, it would have been a bullish move up and then down move through the lows. But we have an engulfing candle here. So this is bearish candle through the lows, bullish engulfing. This is the sniper. This is the entry. So you see how it closed bullish engulfing here? Price scoots over, retests, you take the buy, you have a little bit of drawdown, and then price goes your direction. Any questions on this? For that particular setup, 50% wouldn't have activated. No, it wouldn't have. It only went to about 20%. I think it's Ushan, that's how you pronounce it. Maybe I'm butchering that, but tomorrow we will be going over the kill shot. So don't think I'm just like trying to blow off the kill shot. I just don't want to confuse people. We're just doing snipers tonight. Tomorrow we'll get into kill shots, and then later in the week we'll be putting them all together. Okay. All right. So do y'all remember this trade? I think I gave this to y'all day one. Pretty sure. We had equal lows. Here's your equal lows. This is where liquidity is grabbed. And then you have this bullish engulfing here. So I actually entered on the 1 hour right here. So this is the bearish candle, right? Equal lows, bearish candle through the lows, bullish engulfing, buy the retest, target the highs. So you can see it even broke this high. I didn't have my take profit that high. I had it just right here to these highs, but down move to the low, grab the liquidity, bullish engulfing, buy the retest. That's your sniper. There was an entry on the 30-minute, which I missed, but you can see that this would have been your entry as well. Down move to the low, bullish engulfing. This one, did go to 50% right there. If you really wanted to get that fine entry, right, that would have been your trade right here. Look at that, you're risking 8 pips, and then price went up 100 pips. And is the setup still valid? Price come back? No. So this is not valid at all. We only want to enter on the first one. What we see now, though, you see that? High taken out. Look at this. Perfect equal highs there. Look at that liquidity grab. Don't really see anything on the 1 hour. And this is mostly because news today, right? Big whipsaw wipes out both sides of the market. But, if you would have saw a clean setup, I really don't see anything. Maybe this. So here's your bullish move up through the highs, right? Bullish move up through the highs, bearish engulfing. You can sell the retest, which would have been right here. You go to 30-minute on here. So this, that's where it closes, bearish engulfing. That's pretty close. I think it's kind of ugly. And then if we measure 50% of the bullish candle, right? Remember, we're measuring the bullish candle that grabbed liquidity. See this perfect double top here? It's exactly what I'm talking to you about. Equal highs, boom, taken out. Valid sell. A valid sell on the 2 hour. The reason we don't target we're not buying here again is because this is now our target. So we would be in sells here. Let's just say we took the sell here, stop loss above the high. And we would want to target these lows. That's your 1 to 3, or at least these lows here. So you're risking 20 to make 100 pips. That setup is kind of ugly. Okay. So GJ ended up hitting our stop loss at break even, I believe. Remember, we took the buy here. And this is going to happen. But we took the buy here. We had about 36 pip drawdown, which is quite a lot, honestly. That's why I don't trade GJ too much. Price came up 75 to 80-ish pips and then came back down. You can see it never really broke the structure. And unfortunately, it continued down. But while we see that setup, we can see that this is a downtrend. We have highs here taken out and then highs here taken out. See, this is the kill shot, which we'll go over tomorrow. You see this little down candle and then big bullish move up and then price trades under it. Once price trades under that candle, we can enter at the open or at 50%. Oops. There's your entries. That's your kill shot. We're going to go over this one tomorrow. Downtrend. Do you remember this on the very first day? I said downtrend, look for that consolidation, look for the bullish move up against the trend to grab those highs. Price trade's under it, you can sell the retest. This trade, literally no drawdown here. And then you would have had 11 pip drawdown if you entered at the open. If you sold here, you're looking at about 120 pips in profit. If you sold here, you're looking at about 106 in profit. But y'all see how we're just looking for all of these setups, right? Grab liquidity, create our setup. So super simple. Find the market structure, find the liquidity, and then you just patiently wait for that institutional setup while it's grabbing that liquidity. Okay, I'll be watching this. I don't like how it's about to already hit, so I'm not going to just enter this. But we were looking at that trade last night. Even this would be an okay entry. This big bearish candle down, bullish engulfing. This little buy on the retest here would have been valid as well. But you can see this too, bullish move up, bearish engulfing. So I'm still watching this level here. I'll be watching it. Yeah, so, I mean, you can, so Surratt, you can enter on the second retest. It's just gonna be a lot more risky because now we're creating equal highs, equal lows, right? So if it wicks it once, comes back down, wicks it a second time, that's gonna create equal levels in the market at that entry. So we'll be a little bit risky, still valid though. I usually only enter on the first retest, but everyone will have their own trade plan. You see how they do this? Here's the highs, bullish move up against the trend, bearish engulfing. That's where you start looking for your entries. See, I probably would have waited for this entry and missed it. All right, I think we were looking at this last night. We got a nice little wick entry here, came down, and then you can see obviously this is against the trend, so it didn't play out, but that's why you're gonna make these risk-free. So that dropped 45 pips. Every time my trade's 30 pips in profit, I always make it break even. I'm in the gold cell you posted earlier. Oh yeah, huh? Oh yeah, so this is the trade I sent out, or I showed y'all. Downtrend, equal highs, bullish move up to the highs, bearish engulfing. Sell the retest. See how bullish that looks? So it looked like it wasn't gonna drop, but then just like it ran into a brick wall, right? Immediately stopped. Why did this huge bullish candle stop right here? Because they don't want to release the liquidity above these highs. Look at this, that thing went up 300 pips and then just stopped on the dot. Boom, dropped. There's a reason behind that. What we would look for now is probably a buy here though. Because we have this down move to the lows, bullish engulfing, buy, and the continuation of this trend. But you can see that is 160 pips. What's your food? Here. Is that making sense? This grab of liquidity? You're confused here? All right, so we have this downtrend here, right? Overall, it was pretty bearish here. Equal highs, bullish move to the highs, bearish engulfing. That is a sniper setup. We can sell the retest here. Also, we have lows here. Let's go look at the 1 hour. See these lows, equal lows, down move to the lows, grabs liquidity against the trend, big bullish move up. We can go look at the 2 hour. Okay, so even this right here. Now do you see it? Down move to the lows, grabs liquidity, bullish engulfing. This is a sniper as well. What we're doing is trading setup to setup. So this is our sell setup, and then we're likely going to look for a buy here. And then likely this be a continuation up. See the bullish trend here that's forming? I'm a little confused. I thought you'd be looking for a sell. Yeah, so yeah, the sell is kind of short term, but keep in mind, see, this is older. This is the older setup. This is the newer setup, right? Because this is more recent. The trend is more bullish here as well. Of course, when price gets here, we're going to see, okay, how many people are selling gold or buying gold. The overall bullish is, the overall bullish is bullish. The overall trend is bullish, right? If we go to the higher time frames, pretty bullish overall, right? We just had this downtrend here, but see how it grabbed equal lows? Down move to the equal lows, bullish engulfing. And then if we really look at this, we're going to look at this tomorrow, but also equal lows. See this bullish move up off of the support, and then that big down candle? That is a kill shot. Bullish move up and then random down candle. So again, we're just trading setup to setup though. But you're getting 160 pips out of this trade. And look what your drawdown was. 10 pip drawdown. 10 pip drawdown on gold, I'll take that all day. To make, what is this, 200 pips. Any other questions on here? Or do y'all think y'all can find some of these snipers yourself for the homework? Whatever your 3 pairs are, you can use the ones I used if you want. They can be newer ones, or you can go look at, older price, look for some as well. Yeah, so I'm gonna go over a list of confirmations, and that's gonna be a lesson where we use confirmations. I'm just trying to make sure you can see the chart pattern itself first. What time frame do we start looking from? So I would look at them from anywhere in the 1 hour to 4 hour. So you saw how, what was that on gold? You saw this is a 2 hour setup, and it's also a 4 hour setup. But check this out. If we measure this 4 hour candle, right, this is the down candle that grabbed liquidity. Look at the 50%. So the 50% entry on the 4 hour sniper is the exact same level as the open on the 2 hour candle. See that? That's showing you how that's super valid. So your 2 hour and 4 hour entry is the same. Any other questions? And then tomorrow we're gonna get into the kill shot, and then we are gonna start getting into the confirmations we use, some seasonality, which is really nice. And then we'll have 3 or 4 days to tie it all together. I know it says 10-day class, but if we need 11 days, 12 days, 13 days, I'm available to get on more webinars. Like I still have last month's class all in the group chat together. So don't think I'm just going to do the class and abandon you. I'm going to be here with you to do more webinars. I'm not going to do one every single day for a year, but I'm still going to help out. I'm still going to be here. So, we need to get on some webinars. I'm going to be here. So don't think I'm going to abandon you after the 10 days or whatever. My schedule, let me pop this up. So, okay. So June 20th. No, June 22nd. June 22nd, I'm going to Vegas. So we have this week, and then we'll finish on the 19th. Keep in mind, we don't do webinars on Saturdays or Sundays. But the 22nd, I'm flying to Vegas. If I have free time during this week, I'll be there the 22nd to the 30th. So I can schedule a few webinars throughout there to touch base with everyone. If you're in Vegas, let me know. I have an Airbnb in Vegas if y'all want to come through. I'll be out there gambling and playing poker and stuff. But yeah, so don't think I'm gonna abandon y'all. I'm gonna be here to help y'all. I'm still gonna have the group chat together for y'all. What I recommend is y'all getting to know each other and helping each other. Be active in the group chat. We have the live session group where you can post your analysis and talk to the, everyone, like all 100 people. But if y'all want to work in a close group and work together, feel free to use the June class thread and start talking to each other. When will I be in Europe? As soon as, I already believe Corona is over. I think that was a big media scam, but as soon as everything's open and everything's going good, back to normal, I'm definitely going to go to Europe. Planning a Europe trip, Canada trip, and Bali trip. I already went to Bali and Thailand. Those are my favorite ones. We have some nice casinos here as well. Hey, if y'all are down to go to Bali, I'm down to get a mansion out there. Need to go for like a month though. We'll get y'all all day trading full time and we'll get a mansion out there and grind in Bali. It's probably my favorite place. The vibes there are amazing. Camilla, I think I saw on your Instagram, didn't you go to Bali before? So we got Ushan in for Bali. Yeah, so thanks. Yeah, that is, I'm gonna buy a house there. Definitely gonna buy some rental properties there. All right, so Patrick, is this valid? Let me look. Yeah, Kangu's nice. I stayed in Ubud for 2 weeks, and then I went to like a bunch of different little islands, like a week each, like right off of Bali, like Nusa Senegal, Nusa Penida, like all these other ones. Equal lows, stop loss is the sell stops. So I would look at, so this down there. Yeah, it's decent. I would be looking more at this entry here, this down move, bullish engulfing, buying the retest here. That's where I would look at it from. So if you're looking to enter here, I wouldn't enter here now, but in here, maybe on another time frame, there's probably a cleaner entry on another time frame. That's what I would look for. But yeah, you have the right idea. Equal lows. You see how that's a double bottom here? And then they take out the lows of the double bottom and then they take it up. If they just hold at the support, let me highlight it real quick. So if they just hold here, right, this is where everyone's buying. That's why you see them wick down to hit the stops first and hit those sell stops before they go up. Because if they just shoot up here, all the retail traders trading this double bottom would have profited. But all right, if there's no other questions, I'm gonna hop off. If y'all are gonna be up 2 a.m. Central Time, we are gonna be on the charts live trading London session. No other questions. All right, well, if y'all have any questions, tag me in the chat. I will be up. I'm about to play some poker. I don't know if y'all have heard those people in my background. We have a big poker game going right now at my house. I stepped aside. But yeah, tag me in the chat. And then if y'all are up, I will see y'all at 2 a.m. Central Time.